Thank you so much. Thanks a ton. And here we are, post-lunch, well into post-lunch. And I did see, कि वैष्णवी काफ़ी लोगों को अपने साथ लेके गई है. चाय पिला के वापस ले आएगी. Okay, I assure you. So here we are. Transfer pricing, as our dear master of ceremonies kind of just gave out at this moment, has had a sort of a tricky and a very complex history. So the timeline of this, kind of dates back to, as we were discussing, to about 2.5 decades ago, when it actually got some structure in our country because of the cross-border transactions that were happening between parent companies and their subsidiaries or branch offices in India. So over the years, this has evolved and it's come to a place, and now with the finance minister kind of announcing certain, sort of relief measures, which she called as safe harbor, margins, which we're supposed to be bringing in some sort of a relief, but which has come with its own complexities. Transfer pricing today stands at a place which can make or break the GCC story in India. So our panelists here are going to give us some insights into how this can actually, what are the gaps that you can see in the transfer pricing TP laws in India? Where are the gaps? What can be done? What can be the role of the GCC community? What can collaborations do to change the story? And how should the tax authorities actually be really kind of taking a kinder or more nuanced view of TP laws, right? So without further ado, let's kind of get into the nitty-gritty of it. And Sanjay, I'll call you into the discussion, and maybe the others can also kind of add on to this. So while we know that, there is growing consensus that, transfer pricing laws in India there have some gnawing gaps and there is a misalignment. While we'll get into the exact nuances of it, how do you think safe harbor margins are kind of faring? This was meant to give relief, to those seeking succor in terms of in terms of understanding the cross-border, transaction, the fair value of it all. But this is also kind of given more more space and more more green field for litigations instead of actually giving relief for litigations. So what's your take? Do you concur with this view that it has actually been more contrarian instead of being something that has given relief? A. Two, what are some of the gaps you think the safe harbor margins can address?
Thank you, Shantari, for this question. So definitely safe harbor is a very good measure which government has announced. But in my view, it still needs to be refined. So talk about, like as I said, AJS, there is a provision for KPO services. Safe harbor talks about 24% margin for KPO services if your personal cost is more than 75%. There is a COVID hit us. We all know that now we work from home. There is a hybrid, and industries has reduced their office cost. Rentals have reduced, transportation costs, which is one of the another big item, has reduced. So definitely this has impact on your personal cost as a percentage of total OPEX. So this law needs to be revamped with respect to new scenario, new working environment where we are in. So in addition to this, definitely there are certain ambiguity as well. Talk about what is operating cost. Is subsidy a part of operating cost, or it should be treated as other operating income? There are still nuances into this. So I think government need to fix up and have clear definitions. Or say from GCC point of view, I say we provide ITES services. And then although there is a definition for ITES services in safe harbor rules, it's not that crystal clear. I think government need to elaborate on these services. What exactly ITES? I was just evaluating as our company itself, should we go for safe harbor? And I'm still not getting an answer. Whether we do ITES services, or is it a contract R&D services, or is it a knowledge process outsourcing services? So there is a lot of ambiguity. So I feel that government needs to elaborate these definitions, need to come up what exactly are the rules for this. And the last thing is, they announce for these safe harbor provisions every year. So I don't know whether you are aware, last year they announced the rates for safe harbor just a day before filing the CIT return. So you're supposed to file your income tax return on 30th November. And just a day before you hear about the rates applicable for that year, which is, even for this year, government did well. Sure. And they announced in the last week of March. But still, for a MNC, do invoicing on a monthly, quarterly basis. So it would be good if we have safe harbor rules provisions in place at the beginning of the financial year. So a quick text from my side.
Absolutely. So, and so thank God for small mercies. It was not announced in November. It's not going to be announced in November. At least there's a heads up, right, for most organizations. So, great. Thanks for that. So, Prakash, what do you think? Do you think safe harbor margins are doing their job? And as Sanjay rightly brought in, the rates are highly inconsistent. They're not consistent with what's globally applicable. So, what's your take?
First of all, thank you for inviting me, and it's a pleasure being here, right? So, come looking to Safe Harbor, right? We are, the turnover limit for Safe Harbor is 300 crores. We are way beyond that right now. So, we are actually in an APA. So, even though I may talk about Safe Harbor right now, the margins, if you compare it to APA, right, are very, very high. They really need to look at APA and say, okay, can we rationalize the margin there? Too high for the industry, right? And if you look at, maybe I can give you a view of what FIS is first before I go into, all the different problems that we have today. So FIS, as you all know, is the world leader in the technology services. So if you look at the money cycle, right, if you have the money if you have money at rest in your savings bank account, or if your money is in motion when you're making payments, or if your money is at work when you're making investments, etc., right? So FIS is the company which provides the technology to run all of that across the globe. We are a $10 billion company. If you look at India, we are the largest GCC here, and we've been here for almost like more than 18, 20 years now in this industry. So now if you look at the whole transfer pricing landscape, right, what we are seeing is that, let's go one by one in terms of what are the issues, right? If you look at the Indo-US agreement, right, there is section 3 and 4, where when you have a single member LLC, the US government, even it's a structure in the US, the Indian authorities do not recognize that. So what happens is that they cannot avail of double taxation benefits in India. So that's one. The second thing is in transfer pricing, you have something called as a range. In India, the range is around 35 to 65. But if you look at globally, it's 25 to 75. So you can have a scenario where in India, you may not be within the transfer pricing this thing, but when you look at globally, you will be within that, the parameters there. So that's again an issue which the government needs to fix. The third is the safe harbor problem that we have. If you look at APA, the margins are generally around 16 to 18, but in a safe harbor, it's much, much higher. So they really need to look the learnings from AP and get that into safe harbor. And I think all of the judicial, if you look at the normal assessments that happen, right, all of them, if you see, most of them land up in judicial courts, which take a long, long time to get resolved, right? The government really needs to look at it and say, what are the learnings from the APA? Can we apply it there so that the judicial and this thing can all come down? So these are the points that I can think of, which the government needs to look at.
Absolutely. And I'll circle back to you on the APA further. Oh, yeah, right?
Absolutely.
So, Sanjay, so there are two Sanjays here, huh? So I'm not making a mistake with the names. Okay? So, Sanjay, welcome to this discussion. So, what's your take? Where are some of the gnawing misalignments you see when it comes to TP?
So, I think, again, just to give background to everyone, so I come from the business perspective, so I will not be able to talk too technical on the laws, but from what I've seen from my chair, we've been, so in my company, we have both GCC as well as the manufacturing operations. So we get to see both ends of the world. And primarily, at least in terms of the TP process, what we have seen is that when we get audited by the tax authorities, the tax that gets applied to us is very, very high. Okay. And when we go to the litigation over the next few years, I mean, these numbers come down. Right, so there's a lot of time is getting wasted where we absolutely don't see any value in the way, and of course the safe harbor and the APA, of course, those are the right ways for us to then maybe try and figure out how we can go forward. But I think at the same time, I would say the world is changing, and if you see the government, of course, they want the maximum tax, which is you can't blame for that. Then you have our headquarters outside of India, who of course would like to do minimum taxation, okay, because when they see the bill, when they see the litigation, it just creates a lot of red flags in the system. So I think ultimately I would say that that there has to be a balance that we have to understand where we want to be. So the only way we can actually get there is because, of course, we have to navigate the local laws. We can't go and start formulating the laws in a country, because everywhere you want to do business, you have to understand what's being done, and then you find the ways to navigate and then get to. And I think the focus has to be building your capabilities where actually you can demand more value from, or you provide more value for your overseas units. And then the pain of this transfer pricing can be slightly less. Okay, I think that's the only way I can see, and we'll discuss a little bit more on this, that how we can try and make sure that the GCC are being seen, with more from the perspective of value addition than just these numbers. I think the numbers have to go away. I mean, those numbers, of course, will always be there, but then you can always overcome those obstacles by trying to create value for your headquarters.
Sure. So maybe Sanjay, you can give a sequel to this. So given TomTom's perspective at this point of time, how do you think TP laws can really kind of reform or evolve, keeping in mind value creation, innovation, and local contributions? So what's your take on this?
So like I would say in general for the IP creation for all IT sort of companies, so definitely there is a need that government should come up with DEMP guidelines. So those were announced in 2015 by OECD BEPS Action Plan 8, but it's still to be formalized. So that would help to drive like substance over form, what we say. So wherever there is a value created, there are so many entities which work on a project or a product. So wherever most value gets created, that should get the maximum share. So government should come up with these guidelines. So that's what I feel for intangible assets for software companies.
So when you're talking about intangible assets, what typically are you? Are you trying to say value creation typically is intangible?
Correct. So like which of the entity which creates maximum value should get maximum share of the profit or revenue earned from exploitation of that asset.
Sure. So Prakash, your take on this. So most companies are now getting into the advanced pricing agreement, mode. So is it effective? What challenges does it come with? What are the limitations that it comes with? And how has it really worked?
So APA was a game changer for India, because if you look at it, right, previously, if you look at the if you look at the transfer pricing regime, right, it got announced in 2001, but pretty much nothing has changed within the transfer pricing regime. So come 2013, because of demands from the industry, the government brought in APA, right? And that was, like I said, a game changer, where it brought about certainty, and the margins were kind of very reasonable. If you look at the current margins that you have, it's generally around 16 to 18%, right? So I would say it's good for the industry, but then there are certain problems there. So there was a recent report from CBDT where it takes almost like 46 months to finalize an APA. And in fact, we are talking inside there, where it said that, it's very difficult to convince your parent company, right? If something is taking 46 months, how do I justify this? The other point here is that what the government should generally do, when an APA happens, is they need to keep the transfer pricing proceedings in abeyance. Otherwise, what happens is you are working on your APA, which is taking like months. You are doing your TP assessments also. You are spending time and money on both. So somewhere, the government needs, like in other countries, they keep it in abeyance. They say, okay, let the APA process finish, whether you sign an agreement or whether, depending upon whether you say, no, I don't want to do an APA. But till that point, they should keep it in abeyance. Or what they could also do is the TPA proceedings can, start, but any demand there should be kept again on hold. So that's one. The second thing is, like I said, it takes a long time to complete a TP process. We have dealt with the officers. They are very capable, smart, but then they keep on changing, right? I don't know how many tax folks are there here, but you must have seen when you do a TP assessment, the team keeps on changing, and then you have to go through it all over again. And that creates a lot of uncertainty, right? Because then you have to again go through a TP assessment process. It's the same problem with renewal also, where, it takes a long time. So if your FAR is the same, they should generally, immediately kind of sign the APA agreement. So that's second. The third thing is, when you sign an APA agreement, typically they should keep section 234B and C on hold. They should not charge us because, again, it's an agreement, right? But they still go ahead and charge us 234B, C, which is something that they should look at. The fourth thing is,
in effect, they treat you like a normal business.
Yeah, they treat us like a normal business. Fourth thing is, when you sign an API agreement, you are allowed to revise your return, but your counter associate party, they are not allowed to sign a return, right? So then at that point of time, you have two different things happening, right? They cannot sign a revised return, they cannot claim the double taxation benefits. So some provision should be created to ensure that they also get the benefits. And there is something called as a 92.3 section in the API agreement where, let's say you have filed your returns and you have kind of have higher margins, but your API is signed at a lower margin. They don't allow you to change your margin. So if you are paid higher, you continue to pay higher, which means your taxation is much higher than what you agreed in the APA, whether for your 5-year period or your rollback period. So these are the things that the government should look at and come up with some resolution.
Sure. So which means it makes your APA redundant at some level, right?
It is nice. I'm not saying that APA is not, it is a game changer because it gives you a lot of certainty. Once you sign an APA, you are certain that your margins are going to be what they are.
At least at the threshold.
At least for 5 years. And in fact, we have been one of the earliest ones to sign an APA because we are one of the earliest companies having GCC in India and one of the largest also today. So, but there are certain nuances which they need to take care of, is what I feel.
Sure. So, I see it akin to the hedges and futures, where you actually cover yourself when it comes to the capital markets.
Absolutely.
Right? Yeah. Great point, Prakash. So, Sanjay, coming to you here, as far as the manufacturing section is concerned, so how do you think TP laws really help to cover cost pooling, regional coordination? What are the kind of benefits you really see, or do you really see those benefits?
Yeah, I think when it comes to manufacturing, so we have, there are two different models. So we either do manufacturing for domestic market, and which becomes a entrepreneurial activity where we actually are trying to make money out of the local market, or you're exporting, or you are basically working as a contract manufacturer for your overseas customers or overseas home office kind of stuff, I guess, right? So I think when you're looking at the domestic manufacturing, you could start from, let's say you have different categories there, right? So you could start from somebody who's just trying to sell products here. You just basically earn commission, and then you move on to trading. For example, you actually buy from some other market, you sell it here, or then you become an assembler where you actually do the CKD or you do the SKD, and then you do assembly here in India. And then the fourth one, of course, then over time you mature and you actually start localizing. You start doing your full operations here. And then you start producing here. So I think all of four of these will basically attract different level of taxations. And when you are trying to do full manufacturing here the way we do, then it becomes a challenge of how much royalty you are paying to your mothership, and you also how much intra-company cost that for the SGN and those things. And I think that becomes very challenging because there's a certain expectation that you have to make money. Okay, so I think when you're a local entity here, then they expect a certain. I think this is where we also get confused because how do you force a company to make certain money, right? Because when you have certain costs which is baked in, and then there is an expectation that you have from people who are giving you technology and your IP. Then of course you have to pay the royalty back and cover some of those costs. And so this is where I think this again, if you do the APA, I think the APA of course goes into your GCC kind of setup. But again, here also you could try and get some framework understood with the government and say, okay, this is kind of cost they're okay with. Because what's happening with us is that we keep getting challenged, but then again, we go and show them the evidences, and again, the numbers come down. But if you are exporting, then of course, in export conditions, again, how are you trying to take care of all your cost allocations, for example, right? Those then come into play. So both of these areas, I think transfer pricing, of course, we have to keep in mind when you're trying to file your, show your profitability and those things, they do end up coming into play.
So on one hand, there's royalty cost, and the other hand, there is also repatriation of profits.
So I think what happens, I think ultimately, whoever is investing here, they want to get some money back, okay? They're not investing for free, right? Even if you're investing in other countries. So if you are not, if you're making money, ultimately, you're going to end up paying dividends then, okay? So there will be some way for you to so some companies will say, okay, give me less royalty, give me less. And then again, tax again comes on dividends. So we, as we are trying to go through now that our business is moving from China to India for us because of the issues we are seeing in the tariff and also China plus one kind of strategy. So these issues are surfacing now, right? Because they're looking at the taxation and say, okay, dividends I get for dividends from China, we don't have to pay any taxes there, or the taxes are very less. And then India is 25% or more than that, you have to pay tax on that. So all these factors, of course, end of the day, they'll start playing up in everyone's mind. So I would say when we say we want to encourage investments in India and then want to have more manufacturing in India, then there has to be a comprehensive look that has to happen on how you want to make it more friendly to the businesses to make sure they invest in this market here.
Absolutely. Well stated on that part. So, very curious to understand at this point, Prakash, if I may ask you. So, given the kind of contribution that to the GDP that GCCs are actually, doing in terms of exports, in terms of cross-border transactions, in terms of the value of transactions. So, what do you think can be a sort of a separate TP treatment framework that can actually come in? Or is there a need for a separate framework?
Yeah, so if you look at the number of GCCs that we have in India today, right, almost 1,700 GCCs, that's a fairly big number.
And counting.
And counting, yeah, they are projecting it to be almost 2,400 when you reach 2030, right?
Yeah, NASSCOM's reports. Yeah.
And if you look at the turnover of these GCCs today, it's almost like $54 billion. And you have almost 2 million people employed in this GCC. So, and these are the direct employees, but if you look at the indirect employees, that would be 5x of that. So it's a substantial contributor to our GDP. And, the government needs to look at it and say what kind of incentives can be given to this particular industry, which is growing and significantly contributing to the economy. So that's what I think, the industry definitely needs some sort of help from the government to grow.
Sure. So, Sanjay, what would be that one actionable point, recommendation you would make to policymakers when it comes to TP?
See, my recommendation would be to have some provision for risk adjustment. So when I say risk adjustment, all these GCCs are low risk, transparent entities. As against this, we are benchmarked with other entities in India who are bearing the risk. So I think there is a template for working capital adjustment, but there is no template for risk adjustment because we are not carrying any risk. So other companies might be making more margin because they take more risk. They have the risk of customer, bad debts, other things. As against that, GCCs are all in-house. So there should be some provision for this risk adjustment. There should be some guidelines in place where this adjustment is taken care of.
Sure, that's a good point. So, Sanjay, how do you see the role of industry forums, associations, and how do you think they can change the game for TP reforms?
Well, I think there are a couple of things. I think just to add what my Prakash and Sanjay have added. I think one is, of course, I mean, just to on the policies kind of front, I guess, right? So, of course, the safe harbor and these APA laws that we have in the country, those, I would say there has to be a segmentation because you can't blindly apply across the industries. Okay, you have to look at what the industries are. You have to have function specific or the risk profile. So the profile the risk and then say, okay, these are the kind of APA margins that you could apply or the safe harbor margins could. Abhi kya hai ki pura blanket approach hai, that basically doesn't help. And coming back to the how we want to be able to communicate to the policymakers, I would say I think we have to educate them about what we do in GCCs because it's more than just trying to get tax from the GCCs. It's because I think GCCs are the source of technical know-how in the country and the way we are trying to develop talent in this country and the economy that is growing. Okay, we have a lot of high-paying jobs and this all feeds into each other because I'm in the manufacturing. And the only reason why we are growing in the manufacturing is because we have a very strong GCC. And the GCC basically is helping me to support my customers in India in the same way that I will be going out for support from other countries. So I think it's very important that we educate the policymakers that the GCCs are not a source only for tax, but also what exactly we do, what value we add to the industry and to the ecosystem. And then there should be some way for us to, and then when I would say, the other thing I would say is that when you're doing our first audits, don't try and jack up the numbers where again, after 5 years, those numbers again come down after we go through litigation. Okay, I think that just doesn't make sense. So.
Sure.
Maybe Shantari, I can add here, you mentioned about value addition, right? So when you start adding value, when you start creating patents, the tax department would come and say, you need to increase your margins, right? So I would suggest
I was coming to that. That could be a double-edged sword.
Yeah. So look at, I would take an example from the GST regime, right? You see the GST.
Exactly, yeah.
GST, even though the rates are the same, the revenue is keeping on going up every month on month. So they're not tinkered with the rates, but your revenue is going up. It's the same philosophy with GCC, right? Take a lenient view. The GCCs are growing, even if they added value or if they are doing patents, etc. Keep the rates the same. You are going to get more revenue from this industry, is what I would say.
Perfect point, actually. Yes,
I think
please.
I think we have to somehow move away from this traditional cost plus and the risk mitigated kind of plans, I guess, right? Because we have to move on to where we are cost contributions which are happening, then we also have profit splitting. I think as the country is maturing, as we are maturing as an overall ecosystem, I think there has to be a way for us to then look at the different models than just looking at your cost and then trying to say, okay, risk profile, then I think actually it's hurting us because sometimes actually we are trying to also not disclose that we're doing some R&D activity. So we are trying to make it very, very zero risk-free kind of stuff. Okay, we only do some task-based work and whatever people come and tell us, that's all we are doing. But that's not what's happening in all GCCs now.
Correct, but that's also a classification problem at
Right.
some level, right? In case of understanding.
versus-
Yeah, exactly. So, I mean, as I can see, there's a flat rate on taxes. There is inconsistency when it comes to the APAs and safe harbor margins. And at this point of time, I do think that, intangible, when I was studying accountancy, when I was a student of chartered accountancy, valuation of goodwill was the biggest challenge, for smaller businesses. So when you take it and bring it back to the GCC story, valuing your patents, the value creation can be actually a double-edged sword. I agree with what Prakash said, that the minute you say that, okay, we have enhanced value, then they'll also say increase your margins, right? So it can actually become a story that you would then have to circumvent and navigate in a new way. But we'll kind of, at this point of time, park your opinions here, your insights. Any questions from the audience? Anyone wants to ask anything? Anything that you wish to ask? Anything that comes to you as a question you would wish to ask? Come on, here was an audience here was a panel that really brought out some great points. Did they really finish everything off in half an hour? Okay, great. So we still give 2.5. Yes, please.
Thank you for the insights. I think it is really helpful for us. One question I have is, there is also a third factor other than APA and what we are looking at right now is bilateral. Do you want to throw some light on what is happening in the bilateral side and is it really helping the GCC sector?
That's a good point. Yes, please.
Yeah, I can say. So see, bilateral with few countries, it is really working well. Be it US, there are frequent dialogues happening. But with other countries, say for example, with European countries, like with Netherlands, there is only one meeting which happens between Indian and Dutch tax authorities. We being a Dutch company, frankly, we also filed our bilateral APA 5 years back, or more than that, I think 2017 March. But we couldn't conclude because rate expectation in Europe are different. They expect single digit margin to be made. Whereas in India, every company makes double digit margin. So we couldn't reach to consensus on this margin. So I would say bilateral APA is definitely a good thing. And that's what even government should promote. And we should make it a time-bound program so that there is no double taxation. So you get more taxes, you pay more taxes here because of higher margin, but at the same time you get a deduction in your home country. So that can happen only when it happens. So both countries agree. So as I said, with few countries it is really working well. Say for example US, now UK. But with other countries it's taking some time.
Thank you.
Sure. Anything that any of you want
I
to...
agree with the US. It's been working very well because they have been having frequent meetings. And like you said, it's working very well there. But with the other countries, I agree. The
How
other
about
point,
Southeast Asia?
No, it's not. It takes a lot of time.
Okay.
I have not dealt with it, but I know it takes time, unlike the US.
Sure. Anything that Sanjay? Okay. Any other questions, please? Great. So we've given about 48 seconds back to the conference. So thanks so much. This was a complex topic actually. And I think given the limited time and the vastness, the oceanness of this topic, we've done fair justice. Thanks to our panelists, Sanjay and Prakash in between. Thanks so much. And we call to a close this discussion. Thank you so much.